everybody, and welcome to Trade with Precision free newsletter. My name is Tamar Mehr. In this last video for 2016, I wanted to talk about support and resistance, and I wanted to utilize a couple of markets at the moment that sits in and around their very strong level. And I want to start here with a couple of yen crosses. So on the yen crosses, we had some strong bullish momentum, a week after week after week of buying momentum. So looking at lower time frame trend, looking at this pullback into the buy zone, move away, pull back into the buy zone, move away, and right now another pullback. This is a nice, steady, quite clear uptrend. But I have to have a look at the higher time frame and see where we are at the moment. So what I've got is a very strong buying momentum, which brought us into overextension from the moving averages. And if I scroll back a bit on this chart, and let's just mark in and around where the market starts to have a bit of a pullback, we can see that we are bang on a level. There's a couple of touches here in the past. So what I've got overextension, and I've got a touch of a level. So I would like to see a pullback from this level, and we can start to see that pullback happening here. Now if the market will give me a signal to enter over here in the buy zone, then what I've got is a strong obstacle in the way of my target, and I have to assess that opportunity very carefully, given the fact that there's a strong level in the way of my target. Let's have a look at Aussie yen. And again, Aussie yen pulling back into the buy zone here on the daily chart. Looking here on the weekly, and let's mark the level. And actually, Aussie yen has broken above its strong level in and around the 86 area. But what we have is a bearish rejection candle. So we broke above that level, but completely rejected that break, and now we also have a bearish candle breaking down through the low of this bearish rejection candle. So this is quite a bearish sign. We were overextended, we had a really strong push, and now we're pulling back. So again, if I get a signal to enter at this level, I will have to assess it quite closely to make sure I get my target before we hit this level. These are strong level, and we can see the reaction of the market to the fact that we were overextended and coming into a level. Let's have a look at another yen cross. Let's have a look at Kiwi yen. And the picture here is quite similar. Again, we came up into that level. Let's mark that in again over here. It's around the 83 area. You can see a couple of touches at that level in the past. And the same as Aussie yen, bearish rejection candle off that break, and currently this week already breaking the low of this previous last week low, pulling back into the buy zone on the daily. So once again, overextension coming into a level. Would that be a good setup? Would that be a good opportunity? We'll have to assess that, given the fact that the market is reacting to this very strong level of support and resistance. Now keeping that in mind, let's have a look at the Dow. So looking here on the Dow, and the Dow has never been in this level. We are keep on making all-time highs. You can see the market here on the weekly very much overextended, huge push to the upside. We're coming in and around this level of 20,000. Now we haven't been at that level before, so we can't scroll back and say, hey, the market is coming into a level, we've got an overextension. Quite similar situation than what we have seen here on the yen crosses. All that we have is that level of 20,000 coming pretty close to it, and a very strong overextension. Now what's interesting about that level is that it is a big number. Suddenly we're moving from the teens into the 20, and that seems like a big psychological level. So I'm watching this level quite closely. We are overextended. We had a very strong push, and if we look here at the lower time frame, we can see that we're just consolidating. We're just going sideways below that level. Now this psychological level, as we haven't been there before, we don't know if the market will react to it or not, but we do know that big numbers do give us some levels of support and resistance. And interestingly, another case to that was the German index. So let's scroll back in time. back into 2014. So looking here at this area, you can see that the market coming into the 10,000. Now again, similar to the Dow, never been at this level before, don't have a previous levels of support and resistance to draw on the chart at that level. But what we do have is a big round number, moving from having this market being quoted in 4 digit to being quoted into 5 digits. So it's a big round number, again a psychological level. You can see here we spent a couple of weeks around that level, and then we rejected it, we trended lower, we came up, tested that level again, reacted to it, tested that level again, reacted to it, until finally in January 2015 we broke above that level and continued higher. So this is another example of a level that we haven't been through before, that did act as support and resistance level as the market was pushing toward that area, a psychological level. So in the case of the Dow at the moment, if we'll have a look, we've got overextension and we have a psychological level. We've seen from the yen crosses what can happen around that level. So I'm watching the 20,000 level quite closely. For trading opportunities, I would like to see a release of this buying pressure. We still have a strong bullish momentum on this market, uptrend on the daily, on the weekly, and on the monthly, but I'm very cautious around this psychological level, and also the fact that the market is very overextended at this point. Wishing you a Merry Christmas, Happy Holidays, and a very happy New Year, and I'll speak to you in the next year. Bye for now.